7:41, 19 minutes moving up to 8 o'clock right here on First Up. Keep sending those tweets at First Up Live. We love to share them with the wider population. Right now we focus on finances. And welcome back our friends at the Unit Trust Corporation. In studio we have one of the new guys on the scene. He is a technical strategist and observes price trends. Mr. Kerron Blandin. Good morning. Thank you for joining us this morning.
Well, thank you for having me.
What does a technical strategist do?
Well, as you said, a technical strategist monitors price trends in the market. So after we've done our fundamental analysis and we've decided on which companies we'd like to invest in, I come in and assist the portfolio managers in executing when they should enter, when they should exit.
So basically you're the point guard.
Basically.
Let's start with, well, if you're the point guard, I'm certainly that you would, while you're looking at the trends of other stock and prices around the world, you're certainly looking at Unit Trust UTC funds.
Yes.
What's the performance of the UTC fund in 2012?
Well, I would say that we've performed very well in 2012. All of our 10 funds, with the exception of one, posted positive returns. We had the Growth and Income Fund, which is our flagship fund, posting about 7.67%. Our Universal Retirement Fund posting 8.31%. Our European fund posting 8.12%. So overall, I'd say we've done very well in 2012.
And how does one classify a fund doing well? Is it showing growth and not showing in the negative direction, or are there other criteria for classifying a fund doing well, very well, or exceptionally well?
Certainly. We not only look at positive returns, but we also look at returns versus the benchmark. The benchmark would generally be the index that follows the securities in that particular fund. For example, if you're looking at a Latin American fund, you would look at the Latin American index, the MSCI Latin American index, let's say, for example. So you look at how that index performs and how the fund performs in relation to that index.
And just to break it down for novices and financial imbeciles like myself, what drives a fund doing well or not doing well in terms of the global markets?
Well, first of all, the performance of the index, but generally you would find that the portfolio manager must decide on whether he or she believes that the markets are going to perform or not perform, and they have to position the portfolio in such a way that they can make the most of whatever is going to come.
And is that part of, because your colleagues normally said most of these funds have pretty diversified portfolios in terms of what is in it. So if one isn't doing well, it's juxtaposed against one that will definitely do well, to make sure and balance of the interest of the investor.
Yes, that's correct. So diversification is really important. I think the fund returns themselves show that. In terms of, if you look at the return on the European fund, there's a lot of uncertainty in Europe right now. And if you were to have asked any investment house around the world, do you think Europe will do well in 2012? The answer would have probably been no. And at the end of the day, the European fund has posted over 8% returns. And I think that is testament to the fact that you need to diversify. A properly diversified portfolio would have had European stocks in it, or exposure to a European fund, and therefore would have benefited from that, even though you may not have thought that the European markets would have performed.
So let's just presume I'm coming into the Unit Trust Corporation for the first time. I'll put two scenarios to you. One, a first-time investor, and two, an investor who's been there for like 3 to 5 years.
Right.
Let's start with the first-time investor and going in knowing nothing about funds, bonds, and stocks. What questions should I be asking?
Well, you should be speaking to the representative about your risk tolerance and what you expect for the fund, what your investment horizon is.
Now, what's risk tolerance? And I know what it is, but I'm just making sure everyone has a clear idea of what information you should go in there with.
Yes, it's basically the amount of risk that you are willing to take on personally. Some people are very averse to risk. They do not... They
want no chances. They take no chances. They want a sure thing.
Yes, they want to make sure that their money is safe, their capital is safe and secure.
And usually those are pretty young people who are starting off their work life. Risk-averse people will be, I guess, laid down when you're into retirement, and you can't afford to lose because you have limited income coming in.
Yes, but it also depends on the person's personality, I believe. I mean, in the beginning, you should be able to take on more risk because you have more time to recover if anything goes wrong. But at the same time, there are simply some people who just are not open to it.
And the other factors are?
And I guess we spoke about the time horizon, your objectives, what you would like to achieve from the investments, those things are important.
So you have to know what your objectives are, what your goals are.
Yes.
Balanced against how you think your personality is, your income at the time, your time frame looking down, if you're looking 10 years down the road, if you're looking 20 years down the road, if you're looking toward retirement. And there are different funds and options which are tailor-made for each of these goals.
Yes, exactly.
Let's talk about some of them. The most popular one is the
TT dollar
income.
Yes.
And that supplies me with what, if I'm a novice?
Capital preservation, capital preservation, capital preservation. The TT dollar income fund deals with assets that are relatively safe. It deals with money market, which is short-term fixed income, and we also have long-term fixed income bonds, and it provides that stability of capital while giving you an ongoing payment of dividends.
So you have some level of access depending on whether it's short, medium, or long-term.
You have full access.
Full access?
Yes.
Okay, what are the other options available?
The other options, immediately, when you, as a first-time investor, probably you would go for the Growth and Income Fund. The Growth and Income Fund is a balanced fund where you have both equity and fixed income. We have short-term fixed income, long-term fixed income. We have international equity. We have local equity, a large portion of local equity. So it's really well diversified. And most importantly, we have the price guarantee on the fund, which, well, if you hold your funds for more than 3 years, you are guaranteed at least your principal.
Yeah, so what you put in, you don't lose anything.
Exactly.
Break down for people as much as we can what equity is.
Equity is stock, common stock.
That's what you buy into.
Yes.
That's what you're investing into.
It is really ownership into a company, and it gives you the right to a portion of the earnings of the company.
So if I say CNMG is going on the stock market,
yes,
you want to buy equity into CNMG, you buy a certain percentage of stock into CNMG, depending on what investment level you're at.
Yes.
Or Apple, or any of the major companies around the world, or right here in Trinidad Tobago, the companies that have gone on the stock exchange.
That's correct.
All right. And what would be the third and fourth options in terms of new investors looking at?
New investors may look at the Global Bond Fund. It's a global bond portfolio all over the world, including Trinidad and Tobago. It's very diversified, performed very well in 2012, about 7.43%, and it's doing well at the moment. You may look at diversifying your portfolio even further into Europe. We have the North American fund that performed well as well, 6.9% in 2012. Europe, Asia, Latin America, and spreading around your assets so that you get that diversification.
Do we get a sense from, because I know Unitrust is very much into research, you've done a pretty extensive bit of research last year and probably the year before,
yes,
that people are now realizing that investment is for everyone.
Yes.
There was a sense at one time that, well, I have to have a lot of money to invest. I have to be making $20,000, $30,000 a month. But people on pretty small salaries or relatively fixed salaries can start to invest, as opposed to just saving, because investment means, and a diversified investment portfolio means, you're starting to let your money work for you.
Yes, exactly.
Would that be correct?
Yes, that's correct. The unit trust was actually built for the small man. It was geared towards people who did not have $20,000, $30,000 to go into the stock market. That is exactly what it's there for. And so our minimum investment in many cases is as low as $100, that sort of thing. You can come in with whatever you have and set up a standing order perhaps, and we can work with you.
Let's move to the investor who is now a little more savvy. He or she has been with the unit trust like 5 years to 10 years now, and you've seen growth in terms of the TT income fund, and you're starting to diversify your portfolio and become a little more adventurous. Yes. What would be my options?
Those would be the option definitely would be the global, the international suite of funds. So as I said, the European fund, the Asia Pacific fund, Latin American fund, Global Bond Fund.
Now it's your job to look at these trends,
yes,
and advise the analyst in the UTC so they can advise their customers.
Yes.
What should we be doing? Because certainly I'm now getting more savvy, and I'm investing in the Asian funds and the global funds, and I'm looking at the business reports every night, and I'm seeing things going up and down.
Yes.
Why should I panic? When should I panic? Should I be panicking? Should I be calling my agent? What's like a basic level of information that we should now inform ourselves or arm ourselves with if we're looking to go in that direction?
Okay.
Or should we become financial analysts and start looking at all the stocks ourselves to protect ourselves?
Well, you should never panic. We at the Unit Trust have it under control, and we expect in 2013, we do expect positive growth in the global economy. That should bode well for equities. Also, you know, the U.S. has been pumping a lot of money into the system with their QE program. The European Central Bank has said that they will do whatever it takes to get the markets going, get the banks capitalized. So, you know, we expect positive things for 2013. There may be a correction. There always is volatility, but we have to manage it.
What are the most volatile areas that people should look out for?
Europe at the moment and financials in general are very volatile. They performed very well last year, but that would tend to be the most uncertain area. At any point in time, there can be a debt issue in Europe, and so...
How much do those debt issues like Greece and Portugal affect general European markets, and I guess by extension because of the intricately interwoven financial global situation, U.S. stocks or U.S. markets or other markets?
They affect everything in the sense that when there are fears in Europe, it affects the outlook for global growth. And as such, you would find energy prices responding to it, particularly oil prices. You would find that the stock markets react. People become a little more fearful, and so they start to ease off of buying stock, and therefore the prices go down. So you would find that it does affect everything.
Given the low interest rates, how should investors continue to invest in the domestic scene? Because we have a local stock exchange just now set up.
Yes.
A small start, but you know, a good start. And internationally?
Well, at the moment, as you said, the interest rates are pretty low, and you must invest anyway. I mean, it certainly beats putting your money in a current account or putting your money under the mattress. And I think that at the moment you may consider going more into equities, where even the dividend yields are a lot more than what you would get in terms of short-term fixed income. So both locally and abroad, you would find that those dividend yields pay far better. You would have to deal with the volatility, so it depends on your risk tolerance, but I think certainly equity seems to be...
So low interest rates is an opportunity now to expand one's portfolio or to start investing. It's not a signal for doom and gloom. It's an opportunity.
Certainly not.
Let's look at, in terms of the global market projections for 2013. What are the, based on the trends of 2012, we certainly, those are what informs your information to your agents.
Yes, certainly.
What are the ones that have performed unusually well? And the ones we can look forward to in terms of our investments 2013 and beyond?
Yes, well, I've mentioned Europe and the outperformance of Europe. It really has performed well. A lot of the uncertainty has gone away in terms of Europe, but there still is some uncertainty remaining. But certainly we're looking at the US, the emerging markets, meaning Asia, Latin America. They should perform very well. As I had mentioned, the QE program of the Federal Reserve in the U.S. before, they continue to pump money into the system. The unemployment rate appears to be going down, and things appear to be, the housing market, for example, appears to be bottoming out. So I think that possibly going forward, those would be the places to look forward to, the places where we would get investments. The emerging markets as well, you find that they are very serious about their development agenda. They have a lot of room for expansionary policy if they needed to boost their economies, and so they should do well in 2013 as well.
While you guys at the UTC, that's your job, and leading from a question earlier on, when we hear about these emerging markets like Brazil doing very well, the BRIC countries, China, India doing very well, should we be looking at companies or bonds within these specific companies, or is it that many of the instruments that the unit trust has devised and designed would have interest in these emerging markets through, as you said, the Asia-Pacific market, the European market, the Latin American market bonds? Would these be built into these instruments?
Yes, certainly. The Growth and Income Fund, for example, is a global portfolio. It has exposure to everything. We have the Global Bond Fund, which is on the fixed income side, but it has exposure to all different areas. And also we have the specific funds, the Asia-Pacific Fund, the Latin American Fund, the European Fund, that you can go into for specific exposure to each one of those territories.
Let's talk about how early we should start investing, and by example, teaching our children to invest, because these things are basically habit-driven. The earlier you start, the earlier you start exposing your children to investment and saving side by side.
Yes.
The more accurate they will become throughout their early adolescent lives and certainly into the start of their work lives. How important is that sort of training?
I think it's very important that the investment should start from birth, because you from the time the child is born, you have to be thinking about university and
so you should attach every child that's born to some sort of investment.
Yes, I believe so, and we have the investments for that as well. And the training should, as you say, start from very early, because the habits that you develop from young, you will take into your adulthood. If you believe that spending is all there is, and when your expenses are finished, you go and spend the rest of it, then you continue to do that forever and ever, and you will have issues eventually.
And finally and quickly, people who have found themselves overextended, are there bits of advice, instruments that the unit trust can advise them to get out and start on a path toward more financial security?
Yes, certainly. The funds that we have, all of them work towards that. Particularly, you would want to probably get into something that has a guarantee, like the Growth and Income Fund, or you can place your money in the TT Dollar Income Fund, and you get
so start becoming more financially healthy. All right. Thank you for being us very much, Kerron Blandin. We certainly look forward to you visiting us and adding that sort of clarity. That's our show for today. We thank you for viewing. We want you to have a great day. Be safe and join Disha Ramachan, James Saunders, and Ian Wallace tonight. The C News at 7, and check out our website, ctatworld.com. Have a great day.